How banks in the US are quietly seizing money and cutting off customers. There's a hidden crisis brewing behind the scenes at banks across America. Away from the public eye, a deeply troubling pattern has emerged. Banks are mysteriously cutting off customers without notice and restricting access to deposits. It's like having your money vanish into thin air. I'm hearing from more and more folks who have had their accounts abruptly terminated. No warning, no reason given. Suddenly, they just can't pay bills or buy groceries because their funds have been frozen. Now that I have your attention, smash that like button and subscribe because it's the only way you can help us move forward. Let's continue. When the New York Times caught wind of this and started digging around, they uncovered something shocking. Banks are ghosting record numbers of customers right now in a massive, unannounced wave of account closures. Experts say thousands of Americans each month are getting dumped by their bank without cause, and it's getting worse by the day. One banking insider described it like this: "There's no humanization to any of this. It's all just numbers on a screen. It's not, oh, that's a single mom running a babysitting business. It's, hey, you've checked those boxes for red flags, you're out." Ouch, that's cold-blooded. And those red flags he mentioned seem to be getting triggered an awful lot lately. Maybe you made too many cash deposits, or transferred money to your cousin, or got paid in cryptocurrency. Who knows? Banks don't have to explain why your account is being shut down. If their algorithms detect anything suspicious, you're cut loose, end of story. Now, this shady practice has always gone on to some degree, but ex-bankers say it's accelerated dramatically in recent months for two key reasons. 1. Banks are desperately trying to reduce risks and losses as the economy tanks. And 2. Struggling customers behind on loan payments are getting kicked to the curb to avoid further defaults. When you connect the dots, it paints an ugly picture. The credit crisis is suffocating Americans who are growing anxious about money. Nearly 40% have zero savings. 65% say expenses are rising way faster than income. It's a recipe for disaster. If banks keep cutting people's financial lifelines right when they need them the most, it'll only make the crisis far worse. Businesses will shutter, mass layoffs will surge, the economy will spiral. Dark days ahead. The devil in the data. The cold hard numbers reveal an extremely concerning trend. Suspicious activity reports from banks have skyrocketed 50% this past year, which directly triggers more account terminations. Delinquencies are also soaring as folks struggle with crippling inflation and high-interest debt. No wonder banks are panicking and circling the wagons. But that still doesn't excuse them ghosting hard-working customers without justification or recourse, especially when it seems to disproportionately impact vulnerable groups like students, small business owners, and working-class folks living paycheck to paycheck. By abruptly cutting people off from their own money, banks are holding deposits hostage, potentially inflicting severe hardship and damaged credit scores in the process. Banks are quick to cut anyone loose deemed troublesome. And good luck trying to open an account somewhere else after getting blacklisted without reason. Absolutely devastating. The most baffling part? Bank profits this year have soared to record levels thanks to higher lending rates and massive trading revenues. JP Morgan clocked nearly $50 billion in profit over 3 quarters. They definitely aren't hurting for cash. So why shaft loyal customers now? Some suspect a massive land grab is underway behind closed doors. Banks may be purging low-value accounts to make room for wealthier clients they cover. If true, it's equal parts ruthless and terrifying. Either way, millions now find themselves held captive, utterly dependent on banking institutions that operate with impunity to provide basic access to financial services. Trouble brewing below the surface. Far beneath the rosy headlines trumpeting economic resilience, there's a cancerous rot metastasizing through the banking system, getting closer to the surface every day. Here are the truly unsettling signs experts urged to sound the alarm about. For one, bank deposits have endured their longest slump since the Great Depression. Over the past year, Americans have yanked a whopping $620 billion out of accounts, and the pace is accelerating each quarter as trust crumbles. These rapid outflows speak to growing bitterness among many customers regarding fee hikes, restrictions, and arrogant treatment. For an industry entirely dependent on consumer funds, this should elicit urgent changes, yet meaningful responses remain elusive so far. Meanwhile, bank stocks have collapsed to levels not seen since World War II. Both nationally and regionally, share prices languished down 15 to 25% a year to date, massively underperforming benchmarks. Investors aren't fools. They recognize the worsening economics and reputational damage, and they're signaling legitimate doubts about future profit growth. Commercial real estate also looms as an existential risk, with hundreds of billions in property loans coming due next year just as office vacancy rates flirt with all-time highs. Developers gambled big, assuming work from home would fade fast, but the trend persists, devastating the need for physical footprint. Without desperate renters to fill all this empty space, delinquencies have already begun mounting, and regional banks face catastrophe thanks to outsized exposure here, should cascading defaults kick in. Finally, the most terrifying signal comes straight from the Federal Reserve itself. They now openly fret over potential losses stemming from commercial real estate debt. Talk about alarming words from normally reserved central bankers. And that's just one asset class on their radar. Widespread trouble clearly brews below the surface. Yet, even armed with this knowledge, the Fed continues aggressively hiking rates and tightening monetary policy in ways that remove any remaining guardrails. It's like watching someone dig around a gas pipe with a spade. Any spark could ignite catastrophe. The writing on the wall. Legendary investor Warren Buffett once gave a grave warning that when the tide goes out, you discover who's been swimming naked. Well, when easy money dries up this viciously, what emerges is downright unsettling. See, we just endured the loosest monetary policy since World War II, fueled by epic bond buying and rock-bottom rates, but then the punch bowl got ripped away almost overnight. Now the economy clings to life support as rising rates, shrinking money supply, and lousy sentiment gang up to create chokehold conditions. Businesses and households alike struggle just to tread water. Yet despite all this carnage, the Fed continues withdrawing tens of billions of dollars from the economy monthly. It defies logic. They're essentially dumping lighter fluid onto raging fires at this point. And we haven't even touched upon the profound geopolitical instability throttling trade flows globally. Between these monetary and geopolitical juggernauts bludgeoning sentiment daily, we shouldn't be surprised that faith in the system melts like a block of ice under August Alabama sunshine. But when confidence bleeds from banking, the oxygen supplying every economy organ, it renders profoundly frightening implications. See, banks aren't like other businesses. They rely wholly on public trust to function. When banks stop trusting each other or their customers lose faith entirely, the gates of financial hell swing open. We received an urgent reminder of this fact last month when the fifth small bank failure of the year occurred quietly in the Midwest. You probably didn't hear about it though. The government ensured no advance publicity before raiding the vaults and shuttering branches for good. But now the question becomes, how isolated of an incident was this? Or does it portend gathering storms? Most observers expect a gale-force tempest may already be unavoidable given current conditions, and the bandwagon grows daily. Yet even if disaster gets narrowly averted again thanks to Herculean intervention behind the scenes, make no mistake, the hourglass empties. We inhabit terribly fragile times, friends. This whole teetering tower of debt threatens collapse if jostled too severely. Therefore, as geographical storms constantly remind us, preparing for adversity remains key whatever lies ahead. Expect turbulence, embrace prudence, commit to self-reliance over system dependency, or else discover yourself trapped, stunned, and overwhelmed should supply chains snap or payment channels clog, as they did ominously in September 2019. Yes, dangers loom, but we retain power to face them calmly. Wisdom lies in loving communities, robust relationships, and minimal needs. Skip the chaos, enjoy the flowers. Now breathe easy and have an outstanding rest of the week. Don't forget to like and subscribe to the channel. It is the only way you can support us to move forward and make more videos. This was Econisance. See you in the next episode.